Oil prices surged to near decade highs, barreling past the $110 mark as efforts to boost global supply failed to offset concerns over sanctions against Russia. Now, traders are scrambling to seek alternative oil sources in an already tight market. Take a look. Brent rose by more than $8, touching a peak of $113 a barrel, the highest since June 2014. Now, it's now trading at about $111 per barrel. WTI also jumped more than $8, hitting the highest since August 2013, before losing some steam to trade at $109 per barrel. Now, that's even as U.S. and members of the International Energy Agency agreed to release 60 million barrels of oil reserves to try and plug the shortfall. But that's barely enough to sustain a day of global consumption, and it's equivalent to just less than 6 days of Russia's output. For more, Amrita Sen from Energy Aspects joins us now. Amrita, oil prices continuing to rise despite US and IEA saying they will release those stockpiles. But what's it going to take to calm the market?
I think you need to see some clarity around both US and Europe saying that there will be some exemptions for banks, exemptions carved out for energy. Right now, there's just too much panic. Nobody wants to touch Russian oil because we just have no certainty around which banks will be sanctioned, which banks are getting cut off from SWIFT. So I think once you get a little bit more clarity around those financial sanctions, perhaps a little bit more calm. But the reality is that we are going to see some huge shifts in trade flows. We are going to see some disruption to supply, which does mean we are going to get high oil prices.
Mm-hmm. And meanwhile, OPEC Plus, which includes Russia, meets today. They're largely expected to stick to their production targets. Now, how will this affect prices going forward?
The challenge for OPEC Plus is, and you've seen that for the last 6 months, that they are bringing back 400,000 barrels per day as a part of their agreement each month. But that's the headline number. The reality is that a lot of OPEC Plus members have run out of spare capacity because of underinvestment. Again, if you remember, I mean, less than 2 years ago, we had oil prices negative, and today we are talking about over $100 per barrel, precisely because of the impact of those negative prices, the lack of investment, the lack of drilling. So OPEC Plus isn't able to add 400,000. It's barely adding half of that. So that's the challenge. We were already in a very tight market, and any supply disruption, let alone the size of Russia, can really, really make us go significantly higher.
All right, let's broaden this conversation to the aviation industry. Russia has closed its airspace for 36 countries, and airlines now have to fly longer routes. Now, will that require more fuel and push oil prices even higher? And will travelers have to pay more to fly?
Of course, I mean, look, we were already seeing some increases in demand because of the military buying more jet fuel over the course of the last kind of couple of weeks. And now, yes, airlines will have to take longer routes. You could argue that maybe consumers might, like, you are already seeing the impact of COVID, right? People have been reluctant to travel. Although in the West, I will say that people have been desperate to go on holiday because restrictions have been lifted. Perhaps there's a bit more caution now, given what's going on. But yes, I do expect to see higher demand because of this. I do expect to see higher airfares because of this. The offset, of course, is that you are going to get some demand declining because of high oil prices in some parts, and particularly given what's going on in Ukraine and Russia. Yes, there's potentially some small demand declines there. Overall, though, right, the real challenge for the market is that in Asia, you'll know this, we are still coming out of COVID restrictions. So travel is very strong and there's a lot of pent up demand. So we are coming at a time that despite high prices, people do want to travel. And that just means that high prices are going to be here for a while.
All right. Thank you, Amrita. Amrita Sen, Head of Research at Energy Aspects.